Hi everyone, welcome to this third session of the Business Studies seminar conducted by the Nanaska Institute. So we are meeting for the third time, and the game plan for this session was we have 10 hours, but the initial 5 hours we allocated for the 3 critical areas that we agreed to discuss. The 3 critical areas are the Colombo Stock Exchange, international trade, and the financial management. So when it comes to Colombo Stock Exchange and the international trade, we have already completed those 2 areas with a deep discussion. And afterwards, we even started upon the financial management as well. But due to the time constraint, we were unable to complete that area. So today, during the first hour of this session, I'm focusing on completing the financial management area. And after that, we can have a little chat on some areas you're finding it difficult. And after that, let's go for a quick break. And then we can meet with the model paper discussion conducted by Mr. Chaminda. So let me start with from the very beginning of the financial management as a quick refresher. If you can't remember what we discussed earlier, or if any of you didn't participate during the last class. Let me share my screen. All right, I believe you can see my slide. So when it comes to financial management, we are talking about how to manage our finance. This is a very important topic for any of you because you are just at the verge of completing your school time and coming into the real world of finding a job and doing things on your own to become an independent person. So in that case, managing the finance is a crucial thing. It's not about having a lot of cash or finance with you. It's about how you can manage the money you have in your hand. You don't need to have a lot of cash. You don't need to have millions and billions with you. Still, with some hundreds or thousands, how you can manage it properly, how you can get money from better sources, how you can put money into better opportunities. That is what we are talking about financial management. This is not something that a company should focus on. This is not something the businessman should focus on. Any one of us should have the discipline to manage our finance in the better way and the best way possible. And that is why these 10 people who are the richest people in this planet has reached to this level, because they are best in managing the finances anyone ever. When it comes to Elon Musk, he's the richest person in the planet right now with a worth of $198 billion. So it's about how to managing finance. What do we mean by managing finance or financial management? It is about all the management activities maximizing the wealth of the shareholders by obtaining funds from appropriate sources and investing them in different opportunities effectively to make a benefit out of it. So when it comes to managing finance in a business, it's all about the main purpose behind the financial management in a company is shareholder wealth maximization. And how are you going to do it? There are 2 things that you need to focus on. One is you need to obtain finances from better sources, and then you need to invest those obtained funds into better opportunities, or it has to give a better benefit for you. So with the shareholder wealth maximization, obviously you can achieve the profit maximization where your revenue is greater than the cost you have to incur in the business, and then maximizing earning per share. When it comes to shareholders, they have bought shares in our business. For the share they have bought, what is the return you are giving to them? Earning per share. It can be a capital gain. It can be a dividend that you are giving to them. Those things we actually discuss in the Colombo Stock Exchange area. So you need to maximize the earning per share, or else the long-term financial stability should be there. You should not improve your short-term performance at the expense of the long-term performance or the stability. I told you, if you want to increase your sales figure, you shouldn't sell on credit to anyone who doesn't even has the capability to settle you the money back. Because what will happen is, in the short run, yes, you can show a high figure as the sales, but if they don't pay you back in the long run, what will happen to you in the long run? You don't have the cash in hand. You have sold the products to someone who can't pay us back. Now they are in bad debt, so that you don't have the enough cash in the long run to run the business. So you have improved your short-term performance at the expense of the long-term stability, which is not good. You need to think about the long-term financial stability as well. By managing your finances in the best way possible, you will become stable in the long run. And liquidity in an optimal level. To what extent you can convert your assets into cash quickly. So by managing the finances, you will be able to grab a lot of assets that can be converted into cash without any delay. In terms of financial management, there are two main decisions that you have to take. One is financing, other one is investments. When it comes to financing decisions, that refers to how you obtain money, how you obtain funds. And the financing decisions can be divided into two types again: long-term decisions and short-term decisions. How are you going to obtain money in the long run? How are you going to obtain money in the short run? And the other main decision is investment decision. The obtain money, how you are going to put them into different opportunities, how you are going to allocate them into different opportunities so that you can gain benefits out of it. When you are investing, again, you can divide it into two, as long-term investing decisions and the short-term investing decisions. So first, we'll look into the financing long-term decisions. When it comes to financing long-term decisions, again, you can divide it into two: decisions related to the capital structure, how you have structured your capital in the business. So in terms of the capital, we can think about the loan capital, we can think about the equity capital. Whether you have taken bank loans, whether you have taken from other parties as loans, or you have sold shares in the share market and obtained equity, you can structure your capital with two ways: either capital, either equity capital or loan capital. And then you need to decide upon the ratio between loan capital and the equity capital, whether you want to have more debt in the business, whether you want to have more equity in the business. So these are the decisions related to the capital structure. And the other decision would be the dividend decisions, the decisions related to dividends. Dividends means out of the profit, how much you are allocating to the shareholders or to the owners. And then under dividends, we need to decide the decisions related to retaining profit, how much we are going to retain what we have earned as profit for the future of the business. We are not giving that part to anyone else. We are keeping a portion of the profit with the business itself for the future of the business. And after that, we need to decide the dividends, how much it's going to be, how much we are going to pay to the owners as dividends. Those two decisions should be decided, should be finalized as a decision related to dividends. So these are the financing long-term decisions. Then we have the financing short-term decisions. When it comes to financing short-term decisions, we need to decide on decisions related to creditors. We have both the products on credit, and when are we going to pay them back? We need to decide on that. Decisions related to bank OD and short-term bank loans, short-term loans. So when it comes to OD or an overdraft, that means in our current account, we have written checks to a higher amount than the balance we have in the bank. For example, we have 10 million amount in our current account, but we have written the checks for 15 millions. That means for 5 million, we have taken a short-term loan from the bank. That is what we call as an overdraft. So we need to think on the overdraft or any other short-term loans that we have obtained from different sources, something like maybe a commercial paper. And then decisions related to accrued expenses, any expenses that we haven't settled so far, but it is considered in the present time period, which we are supposed to settle back. Right now it is due. So we need to decide on this. So these are the financing short-term decisions. Then we are coming to discuss the investment long-term decisions, which we discussed last week. So when it comes to investment long-term decisions, we need to think upon the business modernization. If we want to structurally change the business into a different format, we need to spend on that. We need to invest on that. For example, the same example that I discussed last time, if you want to automate your warehouse, obviously you need to bring those machinery into the warehouse. You need to bring that technology into the warehouse. If you need robotic hands to move the cargo from one location to another within the warehouse, you need to invest on those assets and bring those in. So the business modernization can be an investment long-term decision, or else it can be just a replacement where the machinery is having a useful life period of 4 years. At the end of the 4 years, in order to run the process smoothly, you need to replace the machine with a brand new one. So the replacement need to have an investment. Or promoting business. If you want to run a long-term campaign, a marketing campaign in order to promote the business, you need to invest on that. And for that, you need to take the decision. Business diversification. If you want to launch a new product, or if you want to change the existing product with different features, or if you want to go to a new market, maybe right now you're operating only in Colombo district, you want to go all island, or you want to go to India, you want to go to Bangladesh, or you want to go to Australia. When you're doing an expansion like that, when you're doing a business diversification like that, you need to invest. For that, you need to make long-term investment decisions. So these are the main types of long-term investment decisions. Then we discuss the investment short-term decisions. When it comes to short-term investment decisions, there are decisions related to debtors. We have solved the products on credit. Now we are yet to receive the cash from the debtors. So we need to decide how much we are going to sell on credit and when are we going to receive it. It will depend on the credit period we give to the debtors and what are the terms that we have given to them. You need to decide. Then related to trade stocks. When it comes to the trade stocks from other companies, how much we are going to spend or rather invest, and what is the best time to invest, you need to decide. Related to short-term investments, maybe if you are going to buy treasury bills, maybe if you are going to buy commercial papers, maybe if you are going to invest on another short-term investment opportunity, you need to decide. You need to make the decision and go ahead, whether to go ahead or close it down. You need to decide. Related to cash management, how are you going to manage the cash in the hand, cash in the bank? What are you going to do? Are you keeping the cash within you as it is, or are you going to invest on something? Right now, if you look at the Sri Lankan condition, the inflation rate is greater than the savings rate. If I'm not mistaken, Both are into the percentages of 6 point something, but the inflation is greater than the savings rate. That means if you keep the money in your hand or in the bank, the value of the money is depreciating, is kept on depreciating, because the general price of the goods and services are increasing higher than the savings return you are getting from the cash you have. So it's not wise to keep the cash in hand or in bank at the moment. You should invest the cash on something. So these are the cash management decisions you and I should take. And that is why I told you financial management is not something limited to companies and businessmen. It is important and it is useful to any one of us. So these are the things that we discussed during the last class at the latter part. Are we clear so far? Any questions? If you are clear, just say clear or yes, or if there are any questions, just let me know. Okay, how about others? All right, then we are going to discuss the next area where how to optimize the finance and investment decisions. When it comes to optimizing finance and investment decision, right? We need to have a better planning and control. We need to have a better planning and control, because we are thinking about the future. We are thinking about what is yet to come. In that case, we need to have a better plan. We need to have a course of action that we are going to implement in the future with the intention of optimizing the finance and investment decisions. And sometimes you need to compare the planned results and the actual with the expectation of finding any favorable variances or adverse variances. And if there are adverse variances, you need to take corrective actions. And that is what meant by control. You make a course of action for the future. And if something is not right, you need to take corrective actions with the controlling. For the planning and control, you need to have budgeting and cash flow statements in the business. In terms of budgeting, we can divide the budgeting into cash budget and the capital budget. The cash budget will give you an understanding about, the cash payments and the cash receipts that will occur in the future in a given period of time. Let's say during the next financial year, what are the cash payments we are supposed to make? What are the cash receipts we are supposed to receive? So the cash budget will give you that understanding. For example, what can we find in the cash budget? Cash sales. When you sell your product or service on cash, you will receive cash. It should be detected in the cash budget. Sales of non-current assets. Previously, remember I told you that at the end of the 4 years of lifetime period, we are going to replace the machinery. There can be a scrap value, right? Let's say the scrap value is 500,000 rupees. So when we sell the machine, it will become a sale of non-current asset. So the receipt will be 500,000 rupees. Let's say the 4 years of the useful lifetime period is getting completed in the next year. And right now we have predicted or forecasted the scrap value to be 500,000, so that we can record that 500,000 scrap value receipt in the next year cash budget. Then receipts from the debtors. You have sold the goods and services on credit. When you get the cash back, you can record this in the cash budget. When you are supposed to get some debtor collections in the next financial year, you can record it in the cash budget. Purchase of stocks. when you purchase stocks, it can be the stocks in the share market, it can be even the inventory, right? When you buy stocks, you have to pay them. So the cash payments will be there. Payments of salaries. Of course, the employees are working for you in order to earn a salary. When you're paying the salaries, money will be flown out from the company. You need to make a payment that need to be recorded. Of course, you know how many employees are employed in your business. You know per employee salary rate. By multiplying the salary rate into number of employees, you know what the total salary cost will be, which you can forecast in the cash budget. Then purchase of non-current asset. Like you receive money when you sell the non-current asset, you have to make a payment when you purchase non-current asset. If you are supposed to make a payment to purchase a non-current asset or a machinery in the next financial year, you can record it in the cash budget. So this is about the cash budget. Then we have the capital budget. The capital budget will include the decisions related to investments in the coming time period, the long-term investments, long-term payments. So it can be the new machinery purchases or long-term advertising plan, which are longer-term payments or receipts. The receipts, in terms of receipts, those are very rare when it comes to capital receipts. But of course, in terms of benefits, you can purchase different long-term assets or other services which can be recorded in the capital budget. So these are in terms of budgeting. And when it comes to cash flow statement will show you the cash inflows into the business or outflows out to the business, out from the business, in a future time period as well as in a previous time period. It doesn't need to be always future. We can even record about what has happened in the business in the past, as well as we can record about the future. So in order to optimize the finance and investment decisions, we need to have a better planning and control mechanism in the business. For that, we need to have two tools, budgeting and cash flow statement. In terms of budgeting, we can have two types, the cash budget, the payments and the receipts, and the capital budget, the decisions related to investments need to be there. And this is about financing and investment decisions. When it comes to optimizing and optimizing finance and investment decision, there is this well-known quote here: revenue is vanity, profit is sanity, but cash is king. Remember always, right, in simple terms, profit is cool. It's good to have a big profit figure at the end of your income statement. But you know for a fact, profit is a manipulative figure because there are so many non-cash transactions included in the financial statement. For example, depreciation, amortization, and when it comes to accrued expenses and accrued income. Due to those accounting terms, due to those accounting criteria that you are supposed to follow, due to the framework, profit figure can be manipulated. If you want to show a lesser profit, you can bring more depreciation to the current time period. If you want to show a bigger profit, you can avoid depreciation, you can avoid any accrued expenses, you can avoid amortization and increase the profit figure. And that is why we always say profit is sanity. And that is why we always say in simple terms, profit is cool. Yes, it's nice to have a big figure in your bottom line, in the profit layer. But always remember, cash is king, because you can't manipulate cash. If you have 1 million in your hand and that's it, right? Cash is cash. You can't increase the value of the cash. You can't decrease the value of the cash. But when it comes to profit, You can do vice versa. Either you can upgrade it, you can degrade it, because it's a manipulative figure. But when it comes to cash, you can't do anything, and the cash stays as it is. And because of that, in simple terms, we tell profit is cool, but the cash is king. But the cash is king. And after that, at the very last, I'm going to explain two types of buying behaviors: impulsive versus compulsive. So when it comes to buying products or services, there are two main behaviors you can see even within ourselves. There are some goods that, let's say that we go to a supermarket. Okay, let's say that you go to the Cargill's, Kiehl's, or Gloma, Cospa, or whatever the supermarket. When you go to the supermarket, you just see a product, and suddenly you just buy it. Suddenly you just buy it. Let's say a chocolate bar, let's say a candy, let's say a bun, right? You just suddenly see it in the shelf, and you grab it and buy it. So you don't have any decision making process in that purchase. You haven't thought about it for a while, and you didn't get any internal motivation. Just because you saw a nice chocolate bar on the shelf, you just pick it and purchased. Those kinds of buying behaviors are referred as impulsive buying. Impulsive buying. Impulsive buying means unplanned and externally triggered. Internally, you didn't think about it much. Just because you saw a nice chocolate bar on the shelf, you just bought it because you got that desire to eat, since you were externally triggered. Even with a newspaper, the same case, or a packet of milk. The small value products which you get the satisfaction so quickly and consuming it at finish it, those kinds of products are mainly involved with the impulsive buying. You don't need to think about it much. You just quickly buy it, use the product, get the satisfaction, and finish it off. But when it comes to products like a TV, a house, you don't do like that. You take a lot of time to think about that purchase. You will look for different options, different alternatives, and you will contact different suppliers to compare and contrast the different offerings. After going through such decision-making process, you need to finalize which alternative you're going to buy. After all the houses that you have visited, after all the TVs that you have checked, you need to finally finalize what you are going to buy. For example, if it is a TV, first you need to finalize what is the size, whether it is 32 inches, 54 inches, 64 inches. Likewise, you need to decide. Then when it comes to the technology, the LED, LCD, plasma, then digital TV, smart TV, there are different types. You need to decide what type. Then the manufacturer, whether it is Samsung, whether it is LG, whether it is Abans, Panasonic, Innovex. Likewise, you need to decide on the manufacturer. And then who is the seller, whether it is Abans, whether it is Singer, whether it is SoftLogic, right? You need to decide on the seller. And which location are you going to reach to the head office of the company that you're going to buy, or is it the nearby store, right? Then you need to decide whether you are going to make a cash payment, or are you going to make it via a card payment. If it is a card payment, will it be a one-time payment, or are you going to use installments? And you are going to decide in which month I'm going to buy, because you know for a fact when it comes to New Year and Christmas, there are so many offers for these electric items. So are you going to wait until that, or are you going to buy right now? Likewise, you need to decide a lot of things before the final purchase. So this is a planned purchase, and you have been internally motivated. You are not buying a TV just because you saw it on a shelf of the supermarket. You're buying a TV because you have the need within yourself. Maybe your TV is broke, and that's because it is too old and you're going to buy a new one. Or maybe you don't have a TV at all, and because of that, you are going to buy one. So you have been internally motivated, and that is what we call as compulsive buying. When it comes to impulsive buying, you don't think about it. Suddenly, you are triggered from an external matter and you buy the product. But when it comes to compulsive buying, you think about it, you make a plan, you have a lengthy decision-making process, and you have been internally motivated. And based on that motivation and the plan you have made, you buy the product. And when it comes to compulsive buying, the compulsive buying is mostly involved with goods that you are using for a long period of time. If you take a TV, at least you would use it for 4 to 5 years. If you buy a house, at least you stay in the house for 10 to 20 years. So this is the difference between impulsive buying and compulsive buying. Are we clear? Any questions? Any questions? Uh, the rich people will be having impulsive buying. We can't say that. It is not depending on whether you have money or not. But in one way, yes, if I think about it, in one way you can argue. For you and me, buying a TV can be a big thing since it involves a big amount of money. But for a rich people, he can suddenly see a TV, a nice one, he just give the credit card and buy it. That way also you can argue person to person whether it is impulsive or compulsive can be decided, it can be subjective. Yes, you can say like that, but the general norm is when it comes to a product which is quite expensive, it needs a decision making process and you have to be internally motivated, so it is compulsive buying. Okay, any other questions? And when it comes to the question of amortization payment, right? Someone has asked the amortization. When it comes to depreciation, depreciation is allocating the value of a tangible asset evenly during its useful lifetime period. Doing the same for the intangible assets for like patents and trademark, where you allocate the value of a patent over its useful lifetime period equally in different time periods. You call it amortization, which is not something included in business studies. I believe you have it in accounting. Since you asked the question, I answered. Any other questions before we wrap up? Because this is the end of the financial management area. Or are we clear so far? Can I get that confirmation if that is the case? What is the credit facility that offered by a stock broker to investors to buy stock? There is nothing as such. The stockbroker is there as a middleman between the investor and the company. Investor buys the stock of the company via the stockbroker. Stockbroker will advise what are the most sensible stocks at the moment in the share market and how the stocks are moving, whether it is going upward or downward. Based on those information, based on those advisors, investors will make the investment. For that, the broker will make a charge, will charge sort of a commission. There is nothing as such credit facility. Any other questions? No, I'm not doing A-level classes. I'm just being a part of this seminar. I'm actually lecturing for SEMA. All right, so that is the end of the first part of this business studies seminar. As we planned, we finished off the three areas, rather the three critical areas: Colombo Stock Exchange, international trade, and financial management. A deep discussion we went on to give you an overall understanding. My idea was to give you the best understanding about these three areas, not just to write a the best answer on your business studies paper, but to get a better understanding for your personal life as well. So the next plan is from 9:30 onwards, you will be having the model paper discussion with Mr. Chaminda. And until that, we can have a small break.